Good morning and good evening to all. As Adriana said, I will be presenting a brief overview of the global food market outlook, focusing on wheat markets in 21-22. So let me first just give a glance of the overall food sector with the help of the FAO Food Price Index, which is a trade-weighted index of 5 commodity price sub-indices and is a good barometer of price developments in international markets. Food prices have been rising since May of 2020, and as of October, just last month, the FAO Food Price Index was only 3% below the peak value that it reached in 2011, and even marginally surpassed the peak level that it reached in 2008. So, however, one noticeable difference between the current food price spike and the ones that we saw in 07, 08, and 11, 12 is the divergence in price trends for wheat and rice, which are the two most important food staples. Whereas in the previous price spikes, we saw both wheat and rice prices surge. In the current price spike, we're seeing wheat prices surge again, but rice prices are actually falling, which is helping to avoid the same level of crisis that we saw a decade ago. I'm going to be focusing on wheat markets today, but I will come back to rice at the end, given its importance in the food markets. So first, looking at wheat markets, wheat supplies are very tight and prices are at a 9-year high. The graph on the left shows stock levels for every season starting from 2000. They're disaggregated by stocks held by major wheat exporters in the dark red, stocks held by China in dark blue, and then stocks held by the rest of the world for each season in the light blue. At the aggregate or the global level, stocks, as you can see, are relatively high compared with last year's, with previous years. But the problem is really in stocks held by major wheat exporters, which, as you can see, for the past 5 seasons have been shrinking steadily. And then looking at the stocks to disappearance ratio of major exporters, which is defined as domestic utilization plus exports, and thus is a good measure of global availability, shown in the red dotted line. You can see that it dipped to low levels in 08, 09, and again in 12, 13, but the forecast for 21, 22 actually has it falling even lower than those two previous low points. Reflecting this tightness, wheat export prices from all major origins have continued to rise, pushing the wheat price sub-index up almost every month for the past 16 months, and reaching its highest level just last month since November of 2012. So why are markets so tight? What is causing all this pressure? The biggest factor is really the reduced harvest in some of the major exporters, especially lower output of high quality wheat in particular, along with some trade measures that are limiting shipments from some of the major exporters. So looking at production of this season compared with the previous season, Russia, the United States, and Canada are all estimated to have lower production compared with last year, as I've highlighted in the red bars, just to try to highlight for your attention. And those production falls in those 3 countries are leading to a fall in stocks for each of those countries. Stocks falling to especially tight levels in the United States and Canada, which you will hear more about from Mark and Tony in just a minute in the panel. Also, although the EU has a higher production estimate for this year compared with last year, they are producing less high quality wheat, which is also putting pressure on the markets, which you'll hear more about from Justina. In addition to the reduced production, as I mentioned, trade measures by Russia and Argentina have also been limiting shipments. So Russia's floating wheat export tax, which began in June, has been rising steadily. And the government just recently stated that if global prices continue to rise, they may change the formula for the way that they calculate the tax. And this is likely to increase the tax even further. Russia, on top of this, has also stated plans to implement an export wheat quota for the second half of the marketing year. Similarly, Argentina, although not an official measure, has also restricted export registrations of new crop sales to try to slow down the pace of their exports. And the Ukrainian government has also recently agreed to a cap on exports of around 25 million tons. However, that is above their expected shipments for this marketing year, so it should not impede their sales, but yet another trade measure. We've seen, as a result of these dynamics, looking at exports of the major exporters, the last graph on the right, Russia, the US, and Canada are all expected to ship less than they did last year, which is opening the door for EU, Australia, and Argentina to pick up some of that market share. And we've seen a strong pace in exports from the EU, which has remained competitive on higher supplies and also a weaker euro. Also a strong pace of sales from Argentina, as I mentioned, although they are trying to temper those sales, or the pace of those sales. And now everyone is looking to Australia, which is well positioned given its second bumper crop this year and potentially a higher amount of high quality wheat, which we'll hear more about from Amelia in a second. On the demand side, exacerbating the pressure on supplies, demand has remained very strong despite the high prices and despite the pandemic, pushing the global wheat trade forecast up year on year. Much of the expected growth is seen coming from Middle East and Central Asia in particular, where Turkey, Iran, Afghanistan, and Iraq are expected to increase their imports to compensate for reduced production. And again, I've put some of the major expected increases this year in red to try to highlight those. As you can see, also Egypt is expected to increase their purchases this year in order to replenish stocks, which are still below average levels for a second season. We've also recently seen some policies implemented by importers to try to facilitate imports. For example, Morocco lifted its wheat import duty, while Algeria, Saudi Arabia, and China have all eased quality requirements in order to allow for lower quality imports given the issues this year. And just a quick note about China. China is expected to purchase a high volume of wheat again for a second season, but slightly less than they did last year. Although as usual, China remains a bit of a question mark. Interest from China has picked up recently, but also at the same time, imported wheat prices have recently exceeded the domestic price of wheat in China. On top of that, by contrast, domestic maize prices in China are still well below the imported value. So those dynamics may possibly temper wheat imports for China. But again, this continues to be something to keep an eye on. And lastly, also adding to pressure on wheat prices are concerns heading into next season with some pressure points already on the horizon. First, although it's still very, very early in the season and overall conditions look good, there are watch conditions in many of the major exporters, including the EU, Russia, US, and Ukraine, as they plan for next season. Second, surging inflation in some of the key markets, including energy, fertilizers, seed, and freight rates, are all also going to play a role. Although wheat is perhaps less affected by high fertilizer prices than other crops, for example, maize, it is likely to still have an effect on yields and cut into profit margins. So needless to say, there is a great deal of uncertainty which way the market will go. And as you can see, managed money positions have been swinging between long and short positions and effectively taking a neutral stance, reflecting that uncertainty. And finally, just to loop back to the beginning, as I mentioned at the beginning with rice markets, by contrast to wheat, rice markets remain well supplied and prices remain low. Thanks to yield improvements, global rice production is forecast to reach a new record in 21-22, and carryout stocks are remaining close to their record opening levels, with, again, by contrast to wheat markets, with higher expected inventories in major exporting countries for rice markets. And this ample exportable availability is expected to keep rice trade expanding in calendar year 2022. Despite some recent signs of improvement, rice prices have generally remained weaker in 2021. This is mostly influenced by competition among major suppliers, currency movements, as well as efforts to attract buyers that have been put off by the high freight rates and container shortages. So just to quickly summarize, wheat markets are tight following reduced harvest in some of the major exporters, as we're about to hear from our panelists about. However, overall, all signs point to an even tighter start of the season for 22-23, which makes next year's production even more important. However, there are already some red flags, including high input costs and high transport costs, all of which are expected to keep pressure on wheat markets both for the remainder of this season as well as going into the next season. So with that, I'd say thank you, and would also just like to point, if anybody would like further information, you can check out the AMIS Market Monitor, which we publish every month on the AMIS website. Thank you very much.